Welcome to today's Crypto News Update, where we bring you the latest headlines in the world of digital assets. In today's bulletin, we'll cover Bollinger's crucial Bitcoin price alert and the massive $10 billion Bitcoin dump in May. Plus, stay tuned for Vitalik Buterin's strong critique of U.S. crypto regulations. Legendary trader John Bollinger, famous for developing the Bollinger Bands trading indicator, has issued an important update regarding Bitcoin's price trajectory. Bollinger suggests that Bitcoin may be nearing a critical point that could determine its short-term direction. He emphasizes the importance of the current price levels and the potential for significant volatility ahead. Bollinger's insights are highly regarded in the crypto community, and his analysis suggests traders should brace for potential swings and maintain a cautious approach. This update comes at a time when Bitcoin's market sentiment is mixed, with both bullish and bearish signals influencing investor decisions. Crypto expert and analyst Michael Van de Poppe has made a bold prediction regarding Bitcoin's future price movements. According to Van de Poppe, Bitcoin may have reached its bottom and is poised for a bullish reversal. He highlights key technical indicators and historical patterns that suggest a potential upward trend. Van de Poppe's analysis points to the $30,000 mark as a critical support level, with a possible surge back to previous highs. This optimistic outlook comes amid growing institutional interest and positive developments in the broader cryptocurrency market, fueling hopes for a new bullish phase. The landscape of Bitcoin exchange-traded funds is evolving as major financial players adjust their holdings. Recent filings and reports indicate that several prominent ETFs have made significant changes to their Bitcoin allocations. These adjustments reflect the ongoing volatility and strategic rebalancing efforts to optimize returns. Analysts suggest that these moves are in response to market conditions and regulatory developments. The actions of these major players are closely watched by investors, as they often signal broader market trends and sentiment. The continued growth and adaptation of Bitcoin ETFs highlight the increasing mainstream acceptance of cryptocurrencies. May saw a massive sell-off in the Bitcoin market, with $10 billion worth of Bitcoin being dumped. This significant liquidation has raised concerns among investors and analysts about the potential implications for the cryptocurrency market. The sell-off was driven by various factors, including regulatory fears, profit-taking by early investors, and market manipulation speculations. The sheer volume of Bitcoin sold has led to increased volatility and uncertainty about the short-term price direction. Market watchers are now closely monitoring for signs of stabilization or further declines, as the aftermath of this large-scale sell-off continues to unfold. Despite some optimistic predictions, a major crash to $56,000 may be on the horizon for Bitcoin. Analysts warn that there is no confirmation of a bullish reversal yet, and the market remains vulnerable to further declines. Key technical indicators and market sentiment suggest that Bitcoin could experience another significant drop before any sustained recovery. Investors are urged to exercise caution and consider risk management strategies as the market navigates these turbulent times. The potential crash underscores the inherent volatility of the cryptocurrency market and the challenges of predicting short-term price movements. In a significant transaction, an Ethereum whale has moved $101.7 million worth of ETH from Bitfinex to Spark, according to Look-On-Chain reports. This large transfer has caught the attention of the crypto community, sparking speculation about the whale's intentions. Such substantial movements often signal upcoming market actions, including potential sales or strategic reallocations. The transfer highlights the ongoing activities of major players in the Ethereum market and their potential impact on price dynamics. Market participants are closely watching for further developments that could provide insights into the whale's next moves and broader market trends. Ethereum co-founder Vitalik Buterin has labeled the U.S. approach to crypto regulation as anarcho-tyranny. Buterin's critique centers on the perceived inconsistencies and heavy-handed tactics of U.S. regulatory bodies, which he argues stifle innovation and create an unpredictable environment for crypto businesses. He advocates for clearer, more supportive policies that encourage growth while protecting consumers. Buterin's comments come amid increasing scrutiny of the crypto industry by U.S. regulators and reflect broader concerns within the community about the future of cryptocurrency regulation in one of its most significant markets. Ethereum has recorded its lowest gas prices since 2016, marking a significant milestone for the network. This decrease in transaction fees is attributed to recent upgrades and increased network efficiency. Lower gas prices make Ethereum more accessible and attractive for users, encouraging more transactions and activity on the blockchain. This development is particularly beneficial for decentralized applications and developers as it reduces the cost of deploying and interacting with smart contracts. The reduction in gas fees is seen as a positive step towards Ethereum's goal of becoming a more scalable and user-friendly platform. Solana has experienced a remarkable surge of 800% this year, significantly outpacing both Bitcoin and Ethereum. This explosive growth is driven by Solana's high-speed blockchain capabilities and growing ecosystem of decentralized applications. The network's ability to handle thousands of transactions per second with low fees has attracted a surge of developer and investor interest. Solana's impressive performance has positioned it as a formidable competitor in the cryptocurrency space, drawing comparisons to Ethereum and other leading platforms. Investors are optimistic about Solana's future prospects as it continues to expand its influence and capabilities. The cryptocurrency industry is set for strategic growth in 2024, focusing on utility, tokenization, and global reach. Industry leaders are emphasizing the development of real-world applications and use cases for blockchain technology, aiming to drive broader adoption. Tokenization of assets, including real estate, commodities, and digital assets, is expected to gain momentum, providing new investment opportunities and enhancing liquidity. Additionally, efforts to expand the global reach of cryptocurrencies are underway, with initiatives targeting underbanked regions and emerging markets. This strategic focus is anticipated to propel the industry forward, solidifying its role in the global financial landscape. That's it for today's crypto news update. If you enjoyed the content, don't forget to like, share, and subscribe for more updates. Leave a comment below with your thoughts on today's top stories.